Thank you very much. And yes, it is a very interesting time. I would say, you know, over the last few years, the economic shifts that have been happening have been fairly slow, but now they're kind of on hyperspeed. And part of that is the new administration, the changes that, you know, Trump was putting through in terms of the um, tariffs and everything else like that. And people were freaking out to a large extent because it's brand new stuff, right? And it's like we don't know how to interpret this or whatever. And like you saw that in the stock market, where in April we had crashes and incredible rebounds, and then coming back in May and June, certainly the market has stabilized. We're still facing some issues that we're going to cover. So why this matters now, the 2025 economic snapshot, we're going to take a look at where we are. Then we're going to like interpret those economic trends impacting into dentistry and look at the 2025 tax law updates for dentists. We'll have those twice on the agenda. It should only be once. And it's significant. I mean, there are significant changes. We have the big, beautiful bill that just went through the Senate and, narrowly passed the Senate. It's going back to the House for verification or certification. The House is going to have to accept the Senate changes and hopefully, and I say hopefully for dentists and other business owners, this goes through because there's a lot of good benefits in that for people in business. And once we stabilize the tax law, I think people are going to be able to operate on a more aggressive way. Like I think right now, a lot of people are sitting on the sidelines just because they're trying to figure out what's going on and just the big changes and everything else. Implications of the bill on practice management, overhead and cash flow management strategies, proactive tax planning tips for 2025, and then action plan your financial health checklist. So those are the things we're going to be talking about. Why this matters now for 2025. I mean, it's kind of very, very interesting. Inflation is moderating, but still a little bit higher than we want. We kind of picked a 2.5% target, or at least that's what the economists at the Fed really take a look to see. And definitely things have cooled down, but it remains above pre-pandemic levels. And supply and equipment costs are still high, especially for imported materials. Interest rates hold steady at high level. The Fed, is sitting on the sidelines to kind of wait and figure things out. And for me, in my opinion, and $7 we can get a cup of coffee at Starbucks, right? But my opinion is they're probably sitting on the sidelines too long. I mean, just this past week we saw a decline in private payrolls for the first time in 2 years. So that is an interesting statistic, and I think the Fed is just being very, very conservative. They're worried about the inflationary impact of the tariffs that are currently under negotiation. So they're kind of sitting on their hands right now, right? So, but higher interest rates affect practice expansion loans, equipment leasing, and credit card financing. All of that is much more expensive, right? We're several points higher than we were, and certainly we're nowhere near the low cost, pre-pandemic low costs, and even after pandemic low costs, right? Labor market is still tightening. Hiring and retaining skilled hygienists and front office staff continues to be a challenge for most small and medium-sized practices. And labor costs are up 8 to 10% year on year. It all depends really on what state you're in, quite honestly, but some states have higher labor costs than other ones. But when you have a situation like in California where the wage for a McDonald worker has been legislated to $20 an hour, it kind of puts upward pressure on most labor markets, right? Tariffs and global disruption, ongoing tariffs and medical imports, especially from Asia and Europe, raise supply chains costs for dental tools, PPE, dental equipment. We have a lot of that stuff manufactured overseas. Higher tariffs is going to raise prices. And then patient spending behavior. I have a lot of dentists that we work with that are telling me that people are just not spending as much. Some of the big cases are not as prevalent. And we saw this like towards the end of 2024 and in the beginning of 2025. I think the election caused a lot of people to have pause, right? I have a dentist I was just speaking to the other day that their large cases went down by it's like 40% down. I mean, he's doing better this year and he's up this year and he's starting to see an uptick now, which is great and very, very interesting. So, and I hear this throughout other industries I work with too. We've been a little bit in the doldrums with, the election, the tariff talk, and everything else, and people just being nervous because they don't know what to expect. So that's been really, really interesting. And so we have upward pressure on costs, our labor, right, our materials and everything else, and that upward pressure on cost, and a lot of it inflation, right? People got to buy food first, your patient spending behavior, right? They are going to buy food first. And if they can put off dental work, they'll put off dental work, right? And it's because it's not as much a necessity unless you have a bad tooth and need a lot of pain and so forth. Then let's look at how it impacts dentistry, right? So persistent inflation in practice costs, supply materials costs are 10 to 15% over pre-pandemic levels. Practices are seeing higher costs for utilities, sterilization, supplies, and lab services. It's from the ADA Health Policy Institute. High interest financing environment. Prime rates remain above 6.5% Q2 2025, pushing loan costs up. You want to lease some new equipment, you want to buy some new equipment, it's going to be much more expensive. 45% of dentists reported delaying equipment upgrades due to interest rates. Okay. So that is deliberately these interest rates are holding down growth within the dental industry and upgrades within the dental industry. Hygienist shortage remains severe. 63% of practices are reporting hiring delays. Average comp for dental assistants rose 9% year on year. Supply chain disruptions and tariffs. Dental imports face new tariffs under 2025 US China Europe trade updates, right? Still in negotiation, guys, right? But there's still going to be some issues. And sometimes 6 to 9 month delays reported in intraoral scanners and imaging technology. So we're seeing some delays in supply chain disruption, and we're seeing higher costs in supply chains. And like I said, patients are more likely to delay cleanings and elective procedures. 38% of practices now offer third-party financing, care credit, or Sundit. Okay. So we are doing a lot of that other work in terms of financing additional work to make that happen. So let's talk about tax law shifts affecting your bottom line, right? So, and this is pre-bill, this is current law. So this is before the big beautiful bill. This is all going to shift under the big beautiful bill if that passes this week. Trump's pushing for the July 4th signing. Hopefully it gets there. Again, I say hopefully because you'll see why, right? So 179 deduction, which is your ability to buy certain equipment and write it off 100%. The new cap for that in 2025 is 1.29 million, up from 1.2 million in 2024. A phase out begins at 3.2 million in total asset purchases. And the benefit of this is you deduct the full cost of eligible dental equipment and software in the year of purchase. Okay. Bonus depreciation has started the phase out process. This is the old bill. We only can get 40% bonus depreciation. Okay. Right now, it's fully phased out by 2027. It's down from 60% in 2024. The urgency here is to consider accelerating large equipment purchases this year if you want to take that bonus depreciation. However, just a teaser, the big beautiful bill resets that bonus depreciation at 100%. So, I think a lot of people are delaying these equipment costs, equipment purchases, or whatever. And I think what will happen is after the big beautiful bill passes, I think there's going to be an increase in equipment orders and equipment costs. The IRS has new audit triggers for high earning S corps and partnerships. They're focusing on small business compliance under increased funding from the Inflation Reduction Act, increased scrutiny of owner compensation, improper deductions, meals, travel, and entertainment write-offs, right? It's really, really important to document and have all your documentation together when you're looking at any write-offs you have for your business. And the key is what they do. And the IRS is audited the same way they've audited for almost 100 years. They'll come into you and say, show me all the receipts that add up to these numbers on your tax return. So you need to keep all the receipts and the detailed receipts, which in dental practice is not too bad, not too hard. A lot of it is going to be labor, a lot of it is dental supplies. And the dental supply houses are very, very good at providing you documentation, right? And the labs are very, very good. So a lot of your common stuff is well documented. It's really kind of the stuff that is the meals and entertainment and how you do it to make sure you can assure deductibility of those. Okay. Expanded R&D tax credit. Now you can get an R&D tax credit for intraoral scanner software development, teledentistry tech, and workflow innovations. Startup and practices under 5 million in gross receipts can now apply for a payroll tax offset. The R&D tax credit, which gets better, by the way, under the big beautiful bill, is pretty important because you can take a 30% for any increase in R&D spending that you have. You can take a 30% tax credit. This is like money like real money you can use to offset your tax bill. So that, and a lot of people think that in the dental business, well, I'm not inventing anything new, right? But you probably are. Okay, so you need to think about if you're bringing somebody in to write new software, it's R&D, and if you're really in doing anything in terms of developing new processes, you can also be considered R&D and take that tax credit. Not only you take the tax credit, you obviously write off the expenses. 1099K, these issues also change under the Big Beautiful Bill. You have a $600 reporting threshold for Zelle, PayPal, and Venmo, Square. Applies to patient reimbursements and third-party payments and contractors' fees. Ensure your booking systems can handle that flag to make sure you do it. Now, the one big beautiful bill for dentists, okay? It's a proposed comprehensive federal tax reform bill introduced in early 2025. We all are seeing it in the news. It went through the House, it's in the Senate. It needs to go back to the House to approve the changes the Senate made. And they're planning to get that done this week. Trump has softened his stance a little bit, but if he can get this signed, I think it'll be good for business and good for people to move forward. Okay. Changes. Okay. There's changes in deductions and taxable income adjustments. There's credits and accelerated depreciation. There's practice growth and expansion opportunities, hiring and workforce development credits, and IRS compliance and risk management. The bill for dentists introduces tax reforms and strategic incentives aimed at helping dentists grow, modernize, and retain staff. Well, we're all navigating a very challenging economic climate right now. Um, these are going to be the most relevant sections that are really going to impact your real world impact on your practice. Okay. So we're going to go over these a little bit in detail. So let's section 102, expanded deductibility for CE compliance, right? So this allows full deductibility for continuing education, licensure renewal, infection control updates, and clinical software subscriptions, all of which are currently limited or capped under standard tax rule. I think what they're doing in this thing is really recognizing these are necessary, reasonable business expenses. Section 354, retirement plan contribution incentives, earning under 350,000 would benefit from increased deductibles for SEP IRAs, solo 401ks, simple IRAs. Matching contributions may qualify for a 10% payroll tax credit. Okay. So that's very, very interesting. Reducing both personal and employer side tax burdens, right? Pass-through income exemption for health professionals. This provides an additional 10% exemption on QBI, qualified business income, for dentists operating as S corps and partnerships, stacking the current 20% QBI deduction under IRS Code 199A. It effectively reduces taxable income for pass-through entities. Again, initially when this bill went to the Senate, it was at 10%. I think it's down to 3% now. We're going to wait and see. They have still some heavy-duty negotiations. I think last night, in fact, the Senate went all night. So now we're in the Congress. The Congress may go all night, and the Congress and Senate may go all night to try to figure this out and get this done. Section 203, dental investment credits. And remember, tax credits are like money you pay to the IRS. It's basically getting a check, right? Introduces a refundable 15% credit on the purchase of digital dental equipment, increasing to 20% for US-made products. Eligible assets include CAD/CAM systems, teledentistry platforms, AI software, and 3D scanners. Man, so that could be really, really exciting. If this makes the final bill, I think it's exciting. I think, man, you can't turn your head without people talking about AI and the impact. And it is phenomenal. It is going to become more and more phenomenal. And I think the impact of AI cannot be underestimated. I've seen people in, webinars and so forth, like, Eric Schmidt, who used to run Google and was chairman of the board for Google and involved in the tech industry, saying that this is a groundbreaking technology. And I think that's, if you've used it, you can say, yeah, it's a groundbreaking technology. It makes your life so much easier. So many people are now using ChatGPT or whatever instead of Google search, right? And Google has added their own version of AI into Google search. Section 212, accelerated equipment depreciation, reduces the depreciation schedule for dental chairs, sterilizers, CBT CT machines from 5 to 3 years, increasing the value of early write-offs. That's good. Green and safe practice grants provides ten to $40,000 in tax-free grants for eco-friendly upgrades and infection control technologies. So, I mean, this is something that you need to work with your tax professional to make sure that they know and apply for once this bill passes, okay? I mean, it's going to be anything you do in 2025, really, because this bill gets retroactive, I think, to January 19th, 2025. Since the grants are non-taxable and don't reduce basis depreciation, dentists retain the ability to fully depreciate the assets purchased. This is amazing. So imagine you go out and buy this infection control technology, you write it off under accelerated depreciation, you get a non-taxable credit for making this purchase, right? Could be pretty amazing. So it's like free money from the government, right? Kind of like the COVID days in a way. We had the PPPs and the ERCs and all that other stuff. It was very, very interesting times. Practice growth and expansion, Section 401, startup and expansion deduction enhancement. You used to only be able to take $5,000 as a deduction, and now you're looking at 25,000. Applies to new dental offices, additional locations, leasehold improvements, branding, or early marketing, and everything else. So you want to open a new practice? I think it's going to be a very interesting time to do that, right? Payroll tax deferral for small practices allows practices with fewer than 30 full-time employees, which is a lot of dentist practices, by the way, to defer up to 50% of employer-side Social Security for up to 2 years during economic hardship or public health emergencies, giving practices additional cash flow flexibility. So this is really kind of a holdover from COVID, and but it's interesting that if there is some economic hardships or whatever, recessions, you may be able to take advantage of this. Workforce development exceptions, Section 512, grants tax credits to practices that hire graduates from accredited dental assistant and hygienist programs. So you got to train new people. It costs you more money. You can get some credits for doing that. Part of the cost of internal training and continuing education aimed at helping offices reduce onboarding costs. And what I really try to do is figure out what are they trying to do with this bill. It is a 904-page bill. As it stands, the last time I looked, it's probably 1,000 pages now. It could be more, it could be less. I don't know. But it's tons and tons and tons of stuff to go through. And certainly once the bill passes, we're going to go back and take a look at it and make sure we get everything. Audit protection and safe harbor rules, Section 501, creates standardized deduction protocols based on ADA benchmarks that reduce audit risk for dentists operating as S corps or partnerships. Practices that fall within accepted deduction ranges will receive reduced IRS scrutiny, a critical protection in light of IRS expanded enforcement funding. Now, let's talk about the IRS expanded enforcement funding. Trump has already slashed that. Okay. So we know he's already done that. And the IRS right now, from somebody that works with the IRS every day, is a disaster. The best way I can describe it. I mean, it was bad before. In 2016, when Trump came into office, he put a federal hiring freeze and really decimated the IRS because they couldn't hire a lot of new people. It got way worse under COVID. And the IRS and Biden, when he came in, tried to hire 80,000 new people. That hiring was never completed. And they're still having lots and lots and lots of work because you just can't hire 80,000 accountants. There's not that many that you can find that quickly, right? It's just like, oh, we'll turn on the faucet and everybody comes out spitting out. I mean, I literally myself have I hired a couple of people. I actually hired one person from the IRS that was swept out of the IRS in Trump's first initial few weeks. He cut a lot of people, and then there was a lawsuit, and the IRS had to hire her back. So, and they paid her full back pay. So she had to leave my employment to get all the back pay that she didn't earn. So it's kind of a crazy story, but that's where we are. So the IRS is a mess. It's going to take them. Right now, we're seeing 15 to 16 months to process an amended return, which used to be 12 weeks. Okay. So the processing time is horrible. Summary of what this bill could mean for dentists: CE and licensing fully deductible with expanded scope. Bonus depreciation. Our bonus depreciation is back to 100% plus new investment credits. Entity taxation, additional 10% pass-through exemption. Retirement planning, higher deductible limits and payroll credits. Staff hiring tax credits and reimbursements. Deduction cap raised to 25,000 for new startups, payroll taxes, deferrals, IRS risk. We talked about that, and sustainability for the non-federal grant support. Oh, so that's kind of the overview, and really the most important thing I think is going to be the 100% bonus depreciation coming back and being made permanent in the new tax law. That is going to be very, very interesting. Overhead and cash flow management strategies, smart financial moves Dennis should make in 2025. What can we do, right? Obviously, I'm a CPA. Tax planning is very, very important, but we're going to talk about a number of strategies. In facing persistent inflation and clinical surprise, rising payroll costs, delayed reimbursements for insurance and third-party payers, combined with uncertain legislation and rising equipment costs, cash flow visibility has to be more important than ever. You have got to manage your business. I mean, and you have got to watch your numbers. It's more and more important than ever before because if you don't watch your business and watch, there's a guy, The Prophet, who used to be on TV. He may still be on TV. I haven't seen it in a while. If you don't know your numbers, you don't know your business. It's very simple. And we are dentists, we are scientists, we are medical professionals, we're doctors, but we also are running a business. If you're running your own practice, you're running a business. And, I don't, a lot of times what I see is, there's not a lot of training into reading a financial statement when you come out of dental school. There's not a lot of training in terms of tax strategies and everything else like that. And unfortunately, a lot of people in the CPA business don't really embrace educating their clients. I mean, we're here educating our clients because we think it's really important. But a lot of people don't. They just want to put the numbers in the boxes and tell you when to file and how much to pay. And that's not really a great service, in my opinion. Um, so proven strategy for controlling overhead, renegotiate vendor contracts, ask for discounts, secure long-term supply, lab agreements with locked-in pricing and rebate options, leverage group purchasing power through dental buying groups. There's an interesting thing. I spoke to one of my dentists that actually has multiple practices. This manufacturing situation where in the new tax bill, where if you get a manufacturing facility, you can write off 100% of that facility in the first year. So if this bill passes, and I have a dentist buying a building for well over $1 million, that he's going to put a dental lab in. And in a dental lab, we're manufacturing things. So we should be able to write off that entire building, right? Over 39 years, you can write it off or 1 year. So you're looking at $1 million write-off. So then it saves you taxes for a while to make sure you can have that write-off, right? Evaluate equipment ROI, avoid shiny object syndrome. I mean, we're business owners, we all do that. Oh my God, this looks great, whatever. And only invest in new technology that can be tied to a return. Look at your return on investment in technology, either through increased case acceptance or improved efficiency or higher revenue. Number three, review your insurance participation. Analyze your payer mix, eliminate low reimbursement plans that create operational strain. Are we really working for the money we want to make? That's the question. Consider hybrid of fee-for-service model where possible. Revisit office lease terms. Some commercial rents are softening. I mean, depending on your market. I mean, literally, you can, drive around, and if you see a lot of, got to be aware. I mean, I see a lot of for rent signs on commercial properties. I know dental businesses have to have additional leasehold improvements and so forth, but there's a possibility if the market is softening that you may be able to go back and try to get a little bit of a discount, especially if you extend the term, right? Because once landlords start to feel the pinch in other places, like if you're in a building and there's a lot of vacancies and you start to talking to your landlord and you say, hey, you know what? I'm thinking about moving. You know what I mean? And my lease is coming up. If I want to extend, what can you do for me? How can we do it? And maybe your lease is up in 2 years, right? And maybe you can extend then and get a reduced rate if the rates are going down in your market. But again, real estate is a local market all the time. Your real estate market in San Francisco is going to be different from LA, going to be different from Dallas, going to be different from New York. And certain elements, for Long Island could be different from the Queens, right? So every market is local. Cash flow optimization tips, implement tiered payment policies, offer flexible payment plans with third-party lenders, Sunbill, care credit to reduce accounts receivable and speed up cash flow, right? Sometimes offering that financing and taking that money up front can be really, really valuable. Forecast weekly, not monthly. Super important, right? To know your cash flow every week. Once you get used to it, it's very, very easy to maintain, right? And you build in this sense of rhythm to your practice in terms of what week payroll is due, what weeks the rent are due, what weeks the other bills are due. And that sense of rhythm can provide great comfort and predictability cash flow wise. You know what I mean? So that's going to be really interesting. Set a cash flow reserve. Aim for at least 3 months of fixed overhead in liquid reserves. It's really, really smart. I think that's a great idea. Use the sweep account to automate cash movement between operating and savings accounts. You know, you just never know what's going to happen. You know what I mean? You could come into a personal emergency. You could come into a sudden downturn, and with the economy's on. I mean, we only have to look back to COVID and the shutdown and see what happened. I mean, the government jumped in and bailed us out in a lot of different ways. But there was some scary times when it first happened. I mean, I myself, when COVID was first coming out and they're shutting everything down, I'm like, oh my God, I could have 65% of my clients go out of business, right? Or be shut down. So it was scary. So anything can happen. Monitor KPIs routinely, track key metrics like collection rate, adjusted production, payroll as a percent of revenue, overhead ratio to monthly sales, and make real-time decisions. I mean, it's again knowing your numbers, to know your business. It's very, very important. Proactive tax planning tips for 2025. Okay, what can we do to reduce taxes? And you know what? Taxes are so important. I mean, when you look as a percentage of bottom line, if you're a successful dentist, you could be paying 30, 40, 45% of your profit in taxes. Okay. And that's a huge number, especially when you're looking at situations where you may have debt repayments that are not taxable, deductions, right? You wrote off the equipment, but now you have to pay the debt on that. That could be very, very difficult to handle from a cash flow perspective. So let's talk about this. Schedule quarterly tax check-ins with your CPA. Annual tax filing is no longer enough. And if your CPA is not willing to do quarterly meetings with you on tax planning, that's ridiculous. You can't be that way. You don't want to be sitting there on, March 15th, February 28th, April 15th, going, how am I going to come up with this money that your CPA is suddenly telling you owe? So it's really, really important. And then ask those questions of your CPA. How can you help me save money? What can I do? What's the impact? Your CPA should definitely already be talking to you about the bill and what it means to you. I've already given you a couple ideas in terms of what's going to happen. Maximize Section 179 and bonus depreciation. Bonus depreciation 40%. Section 179 is 100%. So sometimes your CPA is going to make a mistake and say, I'll just give him bonus depreciation of 40%. Well, no, you don't want to pay tax. You need to go back and look at that tax return again and again and again to make sure you minimized your taxes. So, yeah, so using 179 is a great trick that in all of our clients, we're using 179 more this year than we did in the past, simply because bonus depreciation is limited. Doesn't make any sense not to use it. So, and the limit has gone up. Reassess your entity structure. Very, very important. Should you be an LLC, S Corp, or partnership? Or should you be a C Corp, which is not in this, which should have been in there? Should you be a C Corp? A lot of people freak out over a C Corporation option, but C Corporation options are very, very attractive. The federal tax rate on the personal side peaks at 37, on the C Corp side peaks at 21. Okay, so you have a 16-point differential in terms of the tax rate. Now, it is true that you have to be careful in terms of how you take money out of that dental practice and how you use everything that you need to use to minimize your profits in the C corporation, so you don't have to take money out. There's a lot of different loopholes and everything else that you can use to do that. You know, the other interesting thing with a C corp is you have a 1202 election, which allows you as a small business to sell your business and sell the stock of your business in a C corporation with no capital gain. Okay, so think about that. If you're a small business, which most of you are, and you sell a stock, you'll have no capital gain. Versus if you sell your practice as an S corp, You're probably looking at an asset sale. You're looking at least a 20% federal capital gain, more, and obviously, if you're in states, you have the state tax, and a lot of states regard capital gains as ordinary income. So California, for example, is 13%, right? Massachusetts is going to be 5%. It all depends on where you're located. Florida is, not going to have an impact because in Florida, Texas, Nevada, Wyoming, tax-free states, right? So really important to look at that. The other thing a C Corp has that's very unusual is there's no passive loss restrictions. If you're an S Corp and you're out there taking some of your profits and buying buildings and getting depreciation to produce losses on the buildings, you can't take those in your personal tax return. They're deferred, right? So in a C Corp, there's no deferral of real estate losses, okay? So that's a very, very interesting. Fully deduct CE licensing, infection control, right? So those are all fully deductible now, so which is great. We talked about that before. Contribute early to retirement accounts. Front load your SEP IRA, simple IRA, solo 401k contributions in 2025 to maximize compounding and ensure full deductibility. With expanded contribution thresholds proposed under Section 354, this could significantly reduce your taxable income if timed wisely. Monitor the IRS triggers. It's true. There's certain safe harbor numbers that could be pretty attractive. But right now, within the last few weeks, the IRS has already announced that they're going to have to cut back on audits, okay? Because they just don't have the staff, okay? And use tax-favored financing tools. Explore financing large investments using tax-smart debt structures that allow you to write off the interest while maintaining cash reserves. This is especially helpful in practices using equipment for expansion incentives under the new dental investment credit. So you see, these things can all come together. The tax planning, the financial planning can all be put together in such a way as to save you money. Action plan, your 2025 financial health checklist. Tax and financial planning, scheduled quarterly CPA check-ins, reassess your entity structure, maximize Section 179 bonus depreciation, track expenses digitally for deductions and audits. I can, with online tools like Xero, QuickBooks Online, some of the other online accounting software, it's very, very easy for you really to get in and track your expenses, right? We have Expensify, we have Receipt Bank, we have other things that you can really watch what's going on, and you can actually get into the detail and see. And it's really, really important that you track those expenses. And really what we're talking about is cash flow and budgeting, which is number 2. Forecast your weekly cash flow and build that 3-month reserve. Really? I mean, it's so important because you want to know whether or not you're increasing or decreasing the money in your bank. Renegotiate key vendor contracts. We talked about that. Reevaluate insurance plans and fee schedules. I mean, prices are going up. I think all your costs are going up like we've talked about. And I think it's probably wise to really assess where you can raise your fees and whether or not your fees are reasonable and whether or not they're at market. I mean, certainly a lot of dentists are tied into insurance contracts and everything else like that. We just need to see what can we do in a situation like this to help us recapture some of our increased costs. We got to think outside the box a lot of times, right? Growth and staffing, plan capital purchases tied to ROI and the dental investment credit eligibility. Evaluate workforce needs and use tax incentives for hiring and training. Prepare for compliance changes under proposed. I mean, for crying out loud, who doesn't have compliance changes, right? Some of those and now those are going to be written off under your tax law, okay? Follow progress of the One Big Beautiful Bill. Model pre and post bill scenarios with your tax advisor, right? Literally, once that bill passes, there are going to be a lot of work that needs to be done in terms of where are we now? Where will we be after the bill passes? And what are the opportunities? What do we do? How do we expand? How do we, take advantage of the new laws? I mean, we don't have fundamental change to tax law very often. The last one was 2017. This is a fundamental change. The 2017 tax law change literally grew business in business growth, 4% GDP in the first 2 quarters of 2018. right? Businesses invested a tremendous amount. Everybody heard the story. Amazon made $1 billion or whatever they're making. They didn't pay any taxes. Why? Because they're out there using the 100% bonus depreciation, buying airplanes, buying trucks, buying warehouses, buying robots. Yeah, they have Amazon now has more robots in their warehouses than people, right? They have over 1 million robots in their warehouses. So they were making all that investment and writing it off under bonus depreciation. And by the way, in the big beautiful bill, there's huge opportunities in low income housing. So if you're investing outside your dental practice, low income housing has credits, it's got other incentives. Again, how is it going to impact dentists? You get people in affordable housing, guess what they're going to be able to pay for? Dental work, right? Everybody wants to look good, right? If you go out to the store, I challenge you to go buy a Sephora, and every time you go by a Sephora, it's crowded. Okay. Sephora and cell phone stores always have crowds, right? Obviously, Chick-fil-A and In-N-Out on the West Coast, right? But so people love to eat, they love to look good, and they want to take videos of themselves looking good. So I think people are going to want to do more dental work as the economy gets better. And I think it's going to be super, super interesting. So that's the conclusion of my speech. Let me take a look at Q&A. What are the write-offs for leasehold improvements? Is that there's dollar amount? Not really a dollar amount for leasehold improvements. Leasehold improvements are qualified business property, which means they're subject to bonus depreciation and 179. Okay. So that change was made in, I think, 2018 when they redid a certain part of the 2017 bill, where those leasehold improvements are subject to 179 and bonus depreciation. And once the big, beautiful bill passes, you want to improve your office, 100% write-off. Okay. What is my opinion on sole proprietorship structure? I don't like the sole proprietorship structure for a couple of reasons. Number one, you're required to pay sole self-employment tax. If you're an S corporation, you can split, you can do income splitting, where you take some of your income as profit, okay, which is not subject to self-employment tax, and you take some as wages, which is subject to self-employment tax. The main thing, the reason I don't like sole proprietorship structure is the IRS statistics on auditing sole proprietorships, 4.7%. Okay. Every year they try to audit 4.7% of sole proprietorships. Why did they do that? Because the IRS is a business that tries to get money for the government, right? And a sole proprietorship, if you find a mistake, first of all, sole proprietorships are assumed to be less sophisticated than an S corporation or people that have incorporated because you guys have taken additional steps to be more sophisticated. So they see that as a target. They believe that that sole proprietorships don't save their receipts, and this is very true with a lot of sole proprietorships. And if they find a mistake or you don't have your documentation, they're going to charge you your income tax rate plus your self-employment rate. So let's say you're at a 24% tax rate and your self-employment rate is 15.3%. So if somebody doesn't maintain their documentation, guess what? You're going to be paying 15 and 24. You're going to be paying almost 40% tax plus penalties plus interest. So auditing a sole proprietorship is very lucrative to the IRS, which is why they try to audit them more than anybody else. Okay. In S corporations, C corporations are less than 1%. So do you want to have a four to five times greater opportunity of being audited? That's the question. And I would go no. Uh, any tax benefit for tax write-offs for using temps, Section 512, hiring new grads. Yes, there's new credits under the bill that I talked about that maybe you could go back and take a look at in this webinar. But is there training in my office count? Yes, there's credits for that now. Under the new bill, there will be credits for you hiring new people and bringing them out on board and getting training time. And there's also not only federal, but you also have state credits too for some training issues. Okay. Temp agencies are, yeah, man. Temp agencies are expensive. Yeah. So I would stay away from temps. Obviously, whatever you spend on temps, you can write off your tax return, but they are very, very expensive. Man, $100 an hour, man. Man, 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 man. I understand. Uh, that's a challenge, a challenging one. You know what I mean? So, I mean, the problem is your hygienist is out for a short period of time. So you're paying a 20% premium on that. Wow. And I would try to stay away from it as much as you possibly can. If you can, I'm not sure how many hygienists you have, Dawn, but you might look at hiring another hygienist part-time to try to offset that. Many hygienists work part-time, right? And I would suggest you could see what you could do with trying to find somebody part-time. Wow. Yeah, Don, that's terrible. We don't want to do that. So I understand that's a difficult challenge. You may, and we may have to look at, oh boy, we have to look at your billing model as well. But if you are at a net loss. Yeah. Even at $80 an hour, you're a net loss. So, I guess if there's some ways you can figure out using some of the training credits and bringing people in from dental hygienist schools, building relationships, um, sometimes there's strategic opportunities. And I don't know how big your office is, but you could have you want to maybe go to a hygienist school and see if you get a strategic opportunity to inquire to them and say, hey, you got anybody looking for a job, right? Or do you have any people that I can hire right out of school? Then you do the training, get the credits and whatever, and perhaps avoid some of this net loss. $10 an hour is tough, right? It's not as bad as, I mean, $30 an hour is tougher, but I think there's some things you could try to do in terms of reaching out to those hygienist schools and trying to get people straight off the assembly line for the it's hygienist schools. You know what I mean? So it may be more difficult from a training perspective, but at the same point in time, it's probably going to be more reasonable. And I assume your hygienist is coming back after she has the baby, but I definitely would, Don, see what you can do with talking to a hygienist school.